Americans are feeling the bite of inflation, and survey shows most of us believe we're sliding toward the recession. But it's not inevitable. Financial advisor Jeff Bangerter joins us now live, here with some advice on how we can prepare for the downturn and what the future might hold. He's got his crystal ball ready. Jeff, thanks for joining us. We just learned this morning of the consumer price index. It jumped 8.6% last month. It was 8.3%. This was higher than investors wanted to see. What do you make of it?
Yeah, I think one of the things that when you think about inflation, right, it shows anytime that we have two consecutive down quarters, and we were down 1.7%, and this inflation number is not going to help. Yes. And as we were kind of talking in the break, you know, if you have the oil prices continuing to stay higher or go higher, even if the Federal Reserve continues to raise interest rates to try to slow inflation, I don't think the interest rates are what's causing inflation. So I think it's problematic for sure.
And moving forward from here, I think a lot of people hear a lot of the experts talk about, oh, the Fed trying to adjust this, investors trying to get a sense on where the economy is going. Hopefully we'll avoid a recession. But I think a lot of people want to put this in perspective. When we're in a situation like we're in now, and we've been more or less in this place before, do we ever not go into a recession? I know a lot of experts say we can wiggle out of this one, but has it happened before?
You know, I've been in the industry since 1979 when there was a lot of inflation, and recessions came followed, and I haven't seen a period of time where we're in this kind of situation where we don't enter a recession. And about 40% of the experts do say that we'll likely be in a recession within this year or next year. So they're giving it kind of a 2-year spread.
Okay, so let's talk about that then. So this is important because since it's not happening right now, it might be on the horizon. Now is the time to prepare for that, adjust our stocks, adjust our spending, and adjust our debt, right?
Absolutely. One of the things you want to think about with your investment portfolio is being well diversified. You know, a lot of people just have stocks, or maybe they have stocks and bonds, but you should definitely add real estate. You should add hard assets. You know, maybe some gold. I don't think you should sell your entire portfolio and go 100% gold, but in the recession of 2008, it did go up over 100%. Again, don't put all your money in any one thing. Be well diversified.
Spread.
And pay off your high interest debt. You know,
okay, that's what I was getting to.
Right. Yeah, that debt's going up.
And that will only continue. So this is really important now that we have this window, I don't want to call it window of opportunity, but a window before a possible recession might get here. Get that paid down as soon as possible because we're going to need every dollar we have.
Absolutely. The Federal Reserve is likely going to continue to raise interest rates. I mean, they raised a half a point recently, and that's the highest in the last 22 years. But they're not done because, again, normally if you keep raising interest rates, you slow down inflation. Again, I don't think that's what's driving it in the current market. I mean, yes, real estate was on fire, and it is slowing down.
It is, yes.
I mean, we're at the lowest number of new mortgages since the pandemic. Yeah. So it is slowing down.
Jeff Bangerter, thank you for your insight, especially on a day where inflation continues to increase. And right now, especially going into the summer months, where a lot of people are traveling, spending more money, this is going to hurt. Jeff, thanks so much. I appreciate it.
Thanks for having me.